Hi there folks, welcome to this week's weekly report. It's Monday the 26th of April. Okay, so what happened last week? Well, basically we saw the US dollar continuing on its downward path. It's now hitting, I think it's 2-month lows against the main counterpart, and that's the euro. So the euro is looking strong and the US dollar is looking weak. We've got quite a lot of central bank rate decisions out this week, so we do need to pay attention. Is this momentum going to continue for the US dollar lower, or indeed is the Fed going to turn in and give the US dollar some support? Let's have a quick look here at this momentum meter. Now this basically shows us exactly what is going on in the currency markets. As I often say, I'm not quite sure how anyone can trade the currency markets, the forex markets, without using something like this. It basically tells you where the money is going. It doesn't predict the future, unfortunately. It just tells us where the money is currently flowing. You see, this is the 4-hour chart. I can pretty much see everything I want to see on the 4-hour chart. And anything that is below the line is deemed to be a weaker currency. Anything above the line is deemed to be a stronger currency. But more importantly, you need to look at the trajectory of the lines, where they've come from to where they are heading at the moment. You see here, this green line here. This green line here, I've aptly coloured the green back, which is the US dollar. The US dollar has been trading lower. Okay, so it's been lower pretty much all of last week. And the other side of that is this euro, this light blue line here, showing some strength. What we're seeing now is some strength coming back into the British pound as well. That seems to have found some good support level in what is pretty much an uptrend at the moment. It's been uptrending pretty much for the last 2 or 3 months. And we're seeing a continuation of that now, of course helped with the COVID vaccine rollout, and the belief is that the UK is going to come out of the post-pandemic recession quicker than its counterparts. So the pound is getting stronger at the moment. Also interesting here now, look what's happening to the Australian dollar. The Australian dollar is now showing some good strength. Okay, we've seen some good data out of Oz recently. Certainly some very good job numbers came out a couple of weeks ago. The markets are in what we call risk on. Risk on is when the markets are taking on more risk. They're basically putting their money into high risk assets or these beta currencies, the high yielding currencies, like the Australian dollar, like the New Zealand dollar, and indeed like the Canadian dollar as well, going into stocks as well. So taking on more risk does tend to support these commodity currencies. And that's basically what's happening at the moment. If you look at the charts, which we'll do in a second, you'll see that stock markets across the globe are all looking pretty strong at the moment. So that's basically showing us what's going on at the moment. We're seeing some strength in the euro, we're seeing some weakness continuation in the US dollar, and we're seeing these commodity currencies, the Oz and the Canadian dollar, looking better as well. To the downside, we're seeing a little bit of weakness coming into the Swiss franc and the Japanese yen. These are the low yielding currencies. Typically, when markets are on risk on, the low yielding currencies like the yen, like the Swiss franc, they tend to come down. Right, so what are we looking at this week? We're looking at the dollar CAD potential long trade going on there, maybe seeing that the dollar coming into some support now as the Fed maybe get a little bit more optimistic. It's going to be hard not to with all the good data that's coming out of the US recently in job numbers, CPI, retail sales came in almost 10% last week as well. So lots of buoyant news coming out of the US at the moment, and the CAD is coming under a little bit of pressure. Now remember, these are not trade signals. You can't go off and make money on these. We're just giving you our guide, our bias of where these currencies may go, but then of course you need to use your own analysis or your own strategy to pick the trades for yourself. So don't go off and start buying the dollar CAD just on the back of our overall bias. But there we go, we've got our target up there at 155.60. Also looking at the Aussie against the Swiss, I've just mentioned the Australian dollar looking strong at the moment, good data, risk on. Aussie is now performing reasonably well, and we've got some bias to the downside in the Swiss franc. See here on the chart, we've been showing a whole bunch of green candles, bullish momentum coming up, taking out a recent level of resistance, and now heading up higher as well. So we're looking at a range basically taking this back up to around the 72.20 level. Again, don't just trade that for the sake of it. Make sure you've got a strategy that you are following. That's just our bias. Now let's jump onto the screens and have a look at the economic calendar and a couple of charts. Come on. Okay, so let's have a quick look at the charts. This is the euro against the US dollar. And you see now, as I said a moment ago on the big screen, that the euro has been far outperforming the US dollar. The dollar has been trading lower. Now we've broken out of this key level of resistance. Often in technical analysis, old resistance will become support, and that's exactly what has happened here. So we broke out of this level of resistance, which I put in there with this bar, we've broken through, come back to retest. Now the old resistance level is acting as support. It's basically around the 120 level. So now momentum is clearly with the euro to the upside and the dollar to the downside. But if you go out to the daily chart now, you can see that we are coming into another band of potential resistance around here, the 120 level. So we really do need to see price trade above here and remain above here for that continuation to happen. Again, all in the FOMC later on in the week. So taking long trades here, maybe you take with some hesitation, knowing that we are going to see some resistance coming in here at the moment. The last time we got up to this level, you saw this big bearish pin bar. This is one of the strategies that we teach and trade. It basically gives us a reversal indication of that mini uptrend, and indeed it pulled back nicely. Had another one up here actually as well. There's another bearish engulfing pattern at the top of this resistance, gave us a good indication that the momentum is to the downside. So this important level here, this certainly at the base of this pin bar, coming in around the 120.50 level. We've got to see price above 121, hold above 21 before we get maybe a continuation of that long trend. Okay, so here is a euro pound chart. This is the daily chart. You can see this trend has been to the downside. Now we have seen the euro being bought up recently. As you know, the euro is now looking strong, but the pound is looking equally strong. And we're having this pullback at the moment, basically into around the 50% of the previous breakout. So the previous breakout, remember, old support acts as resistance. This breakout basically occurred around the 88, sort of 70, 80 level. Got to the low down here of 84.60. This pullback now seems to be stalling at around the 50% of that move. Maybe we're going to see a trend continuation lower. Again, pick your strategies. Make sure you have rules of engagement. Don't just trade anything that I say or anyone says blindly. You've got to follow your strategy. But we are certainly looking at a euro pound to the downside, a trend continuation, as the pound begins its recovery yet again, having had a really good vaccine rollout here in the UK. So maybe seeing the euro trade lower and the pound go higher. This is potentially a good level of resistance to keep an eye on. Okay, so here is the economic calendar. It's very important when you're trading the financial markets that you have something like this. Now you can access this economic calendar by going to forexsignals.com, scroll down to the bottom and you'll see economic calendar. Click on that and it pulls you up to this page. How this works is basically like this. It gives you the data release, obviously the time and the date that's going to come out, tells you what the release is. If you look here on the right hand side of the screen, it shows you the impact indicator. So anything with a red will show a high impact or potentially high impact. Anything with green, less likely to have a big impact. Yellow there is a medium term impact. It's very important that you have something like this, as I say. A, that you don't get caught out. You don't take a trade just before a big announcement, and B, sometimes there are some opportunities to be made as well when these releases are put out. Today, for example, we had some IFO expectations in the Eurozone. Germany came in lower than expected, and indeed, because of that, the euro has been trading lower today. You saw that on the screen a while ago on the momentum meter. The euro is coming under a little bit of pressure. If you don't know what the actual data release means, just click on it, and it pulls up an explanation. So a bit of education in there for you as well. Tells you exactly what that is and how it's likely to impact the market. So do make sure you pay attention to that. So basically, later today in the US, we've got some durable goods. That's basically red impact news release. It could impact the markets. Durable goods basically means washing machines, the white goods, the everyday items that you wouldn't necessarily be buying. Now, normally you're only going to be buying these big ticket items if you're confident about your job and about the economy going forward, unless of course you absolutely need one because your fridge is packed up. But you'd normally only be buying these big ticket items, the durable goods, if you're confident. So that's normally quite a good indicator, a leading indicator to inflation and the economic standing of a particular country. So we do like to look at the durable goods. And also I can look out for the week in advance. So now I'm looking at Tuesday. I want to show more, and you'll see here all the releases that are coming out. So big one, Bank of Japan rate decision. That'll be coming out in the next 24 hours, basically seeing where the Bank of Japan are thinking about their interest rates. Unlikely that they'll be moving interest rates, but as with most of these central bank rate decisions, it's all to do with the follow-on statement that we look at. So give us clues and guidance of what they might be doing in terms of their economic policy going forward, in terms of their bond buying and so forth. So we always pay attention to that, and it has been known to move the yen quite considerably. So make sure you are aware of that. Later on in the week, tomorrow, we've also got some housing data out of the US. Again, it's another forward-looking indicator in terms of inflation. Moving out to Wednesday now, we've got the Fed rate decision. Very important Fed rate decision. It's when the Fed decides on interest rates. Again, it's unlikely that we're moving interest rates. But the following statement is important. And if you've been watching the US data more recently, we've had great job numbers, we've had great retail sales numbers, CPI numbers, all beating expectations. Powell has warned us that inflation will be moving to the upside. He calls it transitory, and he's allowing it to move up as well. But as more of this data comes out positive, as we're seeing, maybe the Fed are going to have to maybe start getting a little bit more hawkish than they have been at recently. Maybe they'll talk about reducing their bond buying. They call it tapering. If they start to taper, i.e. pull back on their bond buying, that would be deemed as a hawkish move, and you may see the US dollar go stronger on the back of that. So all eyes will be watching that. Later on in the week, you can see here we've got the Australian CPI. CPI stands for Consumer Price Index. Again, it's basically the inflation. So they're looking at inflation coming in up 1.4% year on year. Of course, if this is a big miss and inflation is coming in higher, then you're likely to see the Australian dollar go stronger as well. Remember, as I said a moment ago, good job numbers recently out of Australia. What does that mean for the economy? Well, if more people have jobs, more people have money. And if more people have money, what are they doing? Well, they're spending money. And if they're spending money, what happens to prices? Prices tend to go up. And what does the central bank have to do? They've got to control inflation. They've got to keep inflation around the 2% level. So they'll be looking at these data to see indeed if there's any upward pressure likely on interest rates. So we're keeping an eye on that. You can see it's a red impact news release as well. Scrolling on through the rest of the week, we've got obviously the jobless claims numbers out on Thursday out of the US. We've also got gross domestic product, basically the health of the economy. So that's going to be looked on as well. We've got some Japanese data as well later on in the week. So basically the week's going to be dominated by some central banks out of Japan and FOMC. Of course, we've got Eurozone unemployment data later on in the week, which is again very, very important with gross domestic product. So make sure you are ahead of the game, and make sure that you know what is coming out and when it's coming out. Otherwise, you could get caught out. Okay, so I hope you found that useful. As always, don't forget to follow us and hit that bell notification so you'll be notified the moment the next video has been released. And if you want to join us on our regular daily live streams, do come over to forexsignals.com. We are streaming live around the clock, up to 5 or 6 times a day, all do different time zones as well. And you can take out a 7-day free trial. If you don't want to stay, you don't have to stay, you don't have to pay. So do come and check us out. And let me know when you have come over, that you've come over from the YouTube channel, so that I can basically roll out the red carpet for you. If you don't want to come over, that's not a problem. I'll see you next week. Have a good week.